The Federal Reserve is expected to cut rates today, but it's not just about a rate cut on Fed Day. There's a lot of economic theories and opinions out there, and even some conspiracy theories going on. So joining me is, of course, the Einstein of Wall Street to give us the Wednesday wisdom that we need on this topic. Hi, Peter. Thanks for joining me.
How are you?
So thank you for doing your due diligence. I love when we have you, go around unfettered down here to find out what is really going on. So, Peter, first and foremost, why is the Fed cutting rates today?
Okay, so, look, I'm not an economist, but I find this whole thing fascinating. And so when we started going, this is a complete reversal from last year,
Yes.
right? Last year in October, markets hit record highs, and we were raising rates. We saw the market spiral down to the Christmas Eve day sell-off, right? Okay. That was because it seems in retrospect that up until this time, the Fed has really been responding to past data and not being proactive in their economic policy as far as interest rates go, right? We've been on a bit of a tear since the financial crisis of 07-08, where we have easing, right, where we're raising interest rates to fuel the economy. It gets to a point where the market and the economy, which are not always in step with each other, okay? It got to the point where the Fed, it seems, and I'm sort of impressed. I was not a fan of it in the beginning. It didn't make sense. Originally, it seemed counterintuitive to be raising rates when markets were at highs.
Okay.
But what I've learned to understand, because I'm not that smart, is that they are doing it proactively in the anticipation that we're going to see that there are some headwinds out there. Okay? So those headwinds are 18 months of a Chinese deal that is still not etched in stone, which we don't know so much about. The administration is giving us $100 billion, $300 billion. Yes deal, no deal. So there's so much anxiety to the point where earlier in the month, we did see Jamie Dimon come out and go, I have trouble projecting and predicting earnings and guidance for the last quarter and the next quarter because so much we don't know about the tariff question. Okay. So all that being said, we've seen some manufacturing slow down. We've seen Europe. A lot of the Eurozone is in negative interest rates, which we'll talk about perhaps later. We're seeing economies around the world that are in trouble. We're seeing, some biblical stuff going on, right? So there are so many potential pitfalls, headwinds, and problems that are out there. So let's take that as a given. Let's take the fact that the Chinese story is still something that we don't know so much about, and which does have impact on our markets, and Brexit, one more unknown that is also the gift that keeps on giving. It's been going on for years, and that is going to affect our trading partner, our relationship with England, with Great Britain, and the whole trading world as far as us, Great Britain, and Europe. All that being said, the Fed has started to lower interest rates. We've done it now for a few sessions. The reason they're doing it is to be proactive for the headwinds and the unknowns that are happening in the future. So it's proven to be the right thing to do. It didn't make sense to me originally, but after doing my due diligence and homework, I'm now understanding why they're doing it. And it seems that the market is accepting it and the market likes it.
Yeah, and so if that's the case, Peter, is the Fed, do they support the stock market?
Well, they claim that they're not doing it for the stock market to go up. They're doing it as economic policy, whether it's quantitative easing or tightening. They're doing it to support the economy, right? So this is economic data, right? Tariffs and trade wars, global slowdown, manufacturing slowdown, right? Those are economic problems.
Yes.
And so the Fed is responding to what it's seeing. We may not see it all. We're here in a market, right? And as I said, the market and the economy don't always go in step. We're sitting here on the top of the world, in the market that's trading on record highs, and everyone's going, this is all great. And people are going, well, it's not getting better for me. I'm not making more money. My wages have been stagnant. So that doesn't go step in step with the market. We're trading at highs. So their policy seems to be more driven on supporting the economy and the consumer now than the market.
Is there such a thing as the Plunge Protection Team? Have you heard of that?
Wow, you're tossing that one right out there. Okay, so Yes, I've heard about it. Yes, I asked some questions about it. And that's apparently something that came out after the crash of 87. Alan Greenspan, who said that we need something in the event that was such a brutal period of time, short term, but it was the amount of money that was lost intraday in the markets that day. We can't afford that to happen again. So apparently, and it is a conspiracy theory, that there are a group, a think tank of the Goldman Sachs's, some high wealth people and some big banks and some big brokerage firms that are there, that in case there is no one else there to buy the market and we do suffer another crash and something like that, that they will step in to so it's almost like the market is too big to fail. It's the plunge protection against the market failing, that we can't really afford that to happen. So the people who really have big skin in the game are going to be there to step in and buy it.
And some of the people who do believe in that conspiracy theory, they'll point out, they'll say like, oh, there's the PPT, here we go. Now, yesterday, the president tweeted that he might favor, or it almost seems like he was suggesting that we should adapt negative interest rates. What are negative interest rates, and why does the president want them?
Okay, so the interest rates are, look, it's a matter of putting money into the market or take money out, right? Quantitative easing or tightening. Putting fuel on a fire or taking all the oxygen out of the fire, in a way to really support the economy or to prevent against inflation. So Europe, so interest rates are where they are. They were super high years ago. They came down. They got down to virtually zero at the financial crisis, and they got lifted up over the last bunch of years. That really supported and fueled the market. It's economic policy. I'm not an economist, so I try and understand it because it does affect what goes on here on a daily basis. Negative interest rates. So imagine this. I'm going to lend you $1 million, and you're going to give me $800,000 back. Does that make sense in any book? It's like buy high, sell lower, right? It doesn't make any sense. So that's a desperate move for an economy that needs money to fuel itself, but is still running at a loss. So that's waking up in the morning and already being broke. That is right. It's like at the end of the month, you don't get a paycheck, but you have to pay your employer to work there. Right. So it's counterintuitive. It's a desperate measure. Obviously, there are a lot of European economies that have been lowering interest rates in anticipation of trying to fuel their economies. It hasn't worked because of big economic problems. So they continue to do it. They're desperate for an influx of cash. So they're willing, right, to accept. People are willing. They need money bad enough. Maybe there's a kicker at the end of the day, but they're willing. They want money bad enough, and people are willing to put money up to take less than they invest. I mean, look, an investor is somebody who wants to invest $100 and get $200 back. Not guaranteed. If I give you $100, you're going to give me $80 back. That doesn't make sense.
So it benefits the country, not the people.
I don't think it benefits anybody. It's a desperate move to get cash, right? To put money in the marketplace. And into the economy at a loss. Eventually it just runs. It doesn't make sense. It's a desperate attempt.
That wraps up the Fed rate decision today, and all the little juicy tidbits that you want to know about. That is the Einstein of Wall Street reporting from the New York Stock Exchange floor.